Hello and welcome to Leaders of Tomorrow, India's largest platform for entrepreneurs. No matter what your questions are related to any aspect of your business, we've got it covered here on the show. I'm Sunanda Jaiseelan. On the show today, we're bringing you part one of our masterclass, talking about really digital lending and what it is doing for the Indian economy at this point and re-energizing it and revitalizing it. Three experts joining us for just that to break down what you should keep in mind for 2020. Let me dive right in and introduce our guests. Adil Shetty, Co-Chair, FICCI Fintech Committee, Co-Founder and CEO, BankBazaar.com. Anurag Jain, President, DLAI, Founder and Executive Director, Credex. Madan Padiki, Founder, CEO, OneBridge. Gentlemen, such a pleasure having each of you here. I know there's so much to talk about, so let's see how much you can really manage to fit in. I want to first start by asking all three of you very briefly, in one sentence if possible, to talk about what's exciting at your businesses, what 2020 has been like, and to also introduce your business to our audiences. I want to come to you first, Adil.
Thanks, Sunanda. In one sentence, Bank Bazaar is India's largest provider of free consumer credit scores, and we help people access financial products contactlessly. What's happened in COVID is people have migrated to accessing credit cards, loans completely without contact, without paper, without meetings. And that's really a trend which I think is going to grow.
Anurag?
In one sentence, if I have to describe Credex, it would be Credex is India's largest bill discounting platform, and we help vendors of large corporates to basically get their bills discounted and get the money early, which is lying in their which is lying logged in their unpaid invoices that have been raised to the corporates. As far as 2020 is concerned, I think it has been an unprecedented year where we've seen extremes of everything, whether it is to do with the pandemic, whether it is to do with the kind of impact it can have on the business. And it has been definitely one of the washout year for most of the businesses, and I think this was maybe in the looking at the positive side of it, it was required to do the stress testing of the financial services ecosystem in India.
Okay, Madan.
OneBridge is probably one of India's largest village commerce network. We operate in sub 10K villages. We are in about 7,000 villages now in the southern states. And we bring access, choice, and convenience of products and services to rural consumers. And of course, credit is a very critical component of that. 2020 has been quite a crazy year, as everybody is saying, but we've seen a huge spurt in demand and behaviors moving online much faster than what we had anticipated. And we're very gung-ho about the prospects in the rural markets, and that's what is exciting for us.
Okay, now that we've introduced ourselves and we kind of know each other, I want to talk the big picture and address today's theme. Even as we're discussing re-energizing the Indian economy, I do want to ask the three of you, is India really in a position where we can go completely digital when we're talking fintech, when we're talking lending, when we're talking loans? Are we really ready for that? Perhaps, Madan, you want to take this on first, but it's open to the three of you.
Sure, and I will speak from a Bharat perspective. We talked about the India 1, India 2, India 3. I'll speak more from a village perspective. Well, there has been definitely a movement towards digital. I think we are far away from a fully digital model. I think the model that will work in the rural is a phygital model, where you need a physical presence and a digital process. And you need a point of trust, who is maybe a local entrepreneur who then provides the digital access to consumers, but the consumer connect has to be physical. We will need to reimagine Bharat and especially the villages from a phygital standpoint and not only from a digital angle.
Okay, Adil, do you want to jump in on that and talk about the India aspect really when it comes to whether we can move completely digital to respond to what Madan said?
Sure, Sunanda. And, I can talk from my experience of Bank Bazaar's 50 million registered consumers. I want to call out a few data points and offer a slightly different perspective. So the first data point, right, is that today I think there are about 300 million people who have an existing credit score on the credit bureau. So these are people who've taken a loan, mostly offline, but they're already in the credit system. We obviously know the number of bank accounts is much larger, right? Over 800 million. In January of 2020, just before COVID struck, the RBI allowed what is digital KYC, wherein you can just do a video call. It takes a smartphone. I think a 3G connection would suffice. We are seeing that 80% of people who are taking products want to do a video with us, right? So it saves us trouble from sending a sales officer from here to a far off location to collect documents. Everything happens on the phone. I think that for certain products like small ticket personal loans, like credit cards, like a few more products, today the process is 100% digital. Now, does everyone understand it and is able to use it? I think the answer is no. But I would argue, right, that if we can deliver things on the mobile phone and we can simplify it further, I see no reason why people wouldn't prefer using that mobile phone interface to complete the transaction completely contactless. And I say this basis the fact that today I see 80% of the transactions on Bank Bazaar to be fully contactless.
I want to use the example of Aadhaar to say, it's a system that exists nowhere in the world in terms of collection of data and the number of people who've been covered. If we could do that seamlessly, why perhaps is it taking us so much time then to ensure that there is digital penetration and this financial inclusion of most of India? What is taking us time?
I think that's where there are two facets to the question that you just talked about. So when you talk about a digital economy per se, there are two elements to it. Are we talking about reaching out to the last mile consumer through our digital offerings, and the second is whether we are able to give them credit as they need from a digital medium per se. So when we talk about the first one, and where we're talking about reaching out to them digitally, maybe enable them to use digital mediums to make payments, their bills, or maybe accessing data about their crops and the seasonality and everything, I think getting there would be far easier and faster as compared to when we talk about maybe the financial inclusion bit. So and I'll come to the financial inclusion bit in a while, because that's a very, very, I think, broader topic and requires in-depth discussion. So when we talk about the first aspect of it, where we're talking about reaching out to the last miler, I think that is where only technology would be able to take us. It's very difficult for a private institution. Maybe there are efforts from the government side as well, and maybe Madan would be able to add a lot. When we talk about the rural side of it. But when you look at a private institution, it becomes very, very cost heavy and overhead heavy when you look at reaching out physically to the last miler.
Open to the rest of this panel, I want to refer to the working group that the RBI announced earlier this year, acknowledging that there's been a mushrooming of businesses, but saying that there are certain concerns which need to be fixed. Open to all three of you. Adil, if you want to take this on first. What are perhaps some of those concerns that, from an industry point of view, that you think has to be fixed and fixed immediately?
Yes, Nanda, I think first we have to acknowledge that there are certain complaints which are serious problems. So I think there's been a lot of coverage in the news. There was talk about, very aggressive collections, which is not allowed. There was talk about collection of processing fee by entities which are not supposed to do it. There was talk about lending by entities which are not licensed. So firstly, I think we have to acknowledge that there is a valid set of complaints we need to solve. I think the way to look at it, right, is India's got a robust licensing framework as to who is allowed to lend. So a bank is allowed to lend, an NBFC is allowed to lend, a P2P platform has a license to lend. And there are certain outsourced agents who are in contract with these regulated entities, who then help them distribute their products. So there is a robust framework available. In June, the RBI brought out a circular which said, here are the policies for digital lending through your own app or through digital partners. And it clearly says you should be transparent about the rates, you should be transparent about the contract, you should be transparent about collections. So I think we need to make sure that these rules are strictly followed. And people who are not licensed to lend on their balance sheet should not be lending. So I think the RBI is talking to industry bodies and will come up with something good here.
I think I have a slightly, maybe not a different perspective, but something on the lines of what Adil said, but maybe adding to it, is that when you talk about some of these innovative business models that are maybe proliferating in the last couple of years, there is a lot of merit in maybe, giving them a closed environment. And I think regulatory sandbox has been one of the, a very, very good initiative that has come out from the regulator side, which is where it allows you to do a controlled experiment for your innovative business idea before actually venturing out into the real economy and trying to disrupt the entire financial services space. Because at the end of the day, when you're talking about financial services, you're playing with money, right? And that is where there is a lot of merit in being allowed to experiment your business models there. And while the regulator is definitely doing a lot of good things, to be able to facilitate an enabling environment for the startups, I think the innovation is moving at a very, very fast pace as compared to how the regulators are able to do that.
Madan, do you have something to add? Or
Just to add another quick perspective to what both Anurag and Adil said is that the regulation must also come with a very clear set of thrust to kind of educate consumers about this whole thing as well, right? So we'll talk about financial inclusion later, but I'm also speaking about busting some myths and misconceptions that are out there, which make people fall prey to many scams out there. So how do you create a robust information flow to everybody to make sure that, hey, this is what is evolving, it's evolving very fast, and here is what you should do or should not do? I think both should go hand in hand. Else we will not have offtake of great ideas, or we'll have people falling prey to a lot of other stuff. So we need to balance that out.
Gentlemen, I have to take a quick break on that note. We're back in just a moment after this commercial break. Do stay tuned. Welcome back with us here on Leaders of Tomorrow Masterclass. Tonight, we're talking about digital lending and re-energizing the Indian economy. We've got a first viewer query coming in. This question is coming to us from Jhansi Mohan. This is a question to Adil. She says that you were talking about smartphone penetration. Adil, the US, for instance, is at about 68% when we're talking about the number of smartphones for the population. India is only at about 25 to about 30%. We have a long way to go. So I'm assuming she's asking you how can that be fixed, and your suggestions on that.
Yeah, so Sunanda, I understand that we have over 350 million smartphones in the country, and they're growing at a rapid rate. Given the rates given that the costs are rapidly falling, data today in India is available cheaper than anywhere else in the world. I think essentially what I'm saying is we have to look at and build for where the country is headed. And I would say that the growth of smartphones reaching, almost every working adult there is happening very quickly. But, maybe we need solutions in the short term otherwise. But very clearly, I think smartphones are penetrating everywhere quickly.
Okay, our second question is coming to us from Neha. Neha says she's a researcher. What are the consumer protection or consumer awareness innovative steps that digital lenders, including the ones on today's panel, are taking in India to restore consumer trust? Financial inclusion needed, but at the same time, there's a tendency of financial exclusion as well. Anurag, maybe to you first, since you were talking about digital inclusion, but Open to all three of you.
We have taken a lot of steps, especially to educate our consumers around what basically constitute a good app, and how do you differentiate from the rogue lending apps which are available in the market. And we as an association have been the first ones to maybe try and create an awareness around it. We have a campaign where we are trying to educate the consumers around some of the basic items, and I'll maybe iterate one or two of them. So one of the things is that if somebody is maybe asking you not to provide your KYC documents, if the onboarding process is easier and faster than it should be, there is a trap that you are maybe getting into. If they are not letting you know the charges at the onset, maybe they're trying to get you into a trap. So some of these things, when you try and look at, when you do the analysis of the incidents that have happened, and when you see that some of these common trends that were there in most of these cases, people did not ask for, or the apps did not ask for your KYC information. They did not have any kind of robust mechanism to locate them. They did not ask for a lot of documentation. They were asking for the repayment in cash. So things like these should be a definite red flag for the consumer.
Okay.
You should definitely try and find out if there is any kind of a trail for that particular company on the internet. If the founders are available, can they be tracked? Are they available over an email, social media, and things like that? And that'll basically sort of try and vet those lending apps, and not sort of prevent them from falling into a trap.
Madan, if I can sort of, pick up on some of the things that have been said and speak about challenges, but, ask you to really comment on the fact that in tier 3, tier 4, in rural India, in Bharat, as you were saying, perhaps the biggest challenge is that there's no formalization really of the industry. You have small lenders, etc., and that perhaps is also compounding the problem. How can that be fixed?
You're absolutely right, Sunanda. And I want to share a quick anecdote here. I was in a village about 100 kilometers away from Bangalore called Urdigire, and I was speaking to one of our Kirana store entrepreneurs there, and talking to him about digital lending. And he said, "Come, I'll take you to a street." And we went to a small lane where there were 7 houses, and all of the houses had either a car or a two-wheeler. And he told me a story that about 6 years ago, there was only one money lender in this village of 20,000 people, but now there are 7 money lenders. So he was actually posing the other question to me, that you talk of access to finance and credit, but why are money lenders in our town thriving? And when from a positive point, he said, listen, I can walk into any of these houses and within 10 minutes, I can be out with the money I need, but can you match that speed with us? So obviously they're paying a bomb for that loan they take. So the question really for us is, what can we do to simplify the process and make it as easy as walking into a money lender's home and coming out with with the money that you need in less than 15 minutes flat? And how can you make that work in rural amidst all the challenges we're talking about? There's a digital challenge, there's a trust challenge, and of course there is an awareness challenge. And we need to kind of solve for all of these 3 together in parallel to make it as easy as it, without all the attendant risks and the costs that come along with it.
Digital lending, how can it help the D2C segment where CAC is high, LTV is volatile, considering that the future is in embedded finance? Anyone wants to take this question on? I see both Madan and Anurag, in fact, nodding, but Adil, if you want to take a stab as well.
I can take that. So basically, where you talk about D2C is basically the direct to consumer, and CAC is basically the customer acquisition cost, which is far higher when you talk about today's customer. So when you talk about the customer acquisition today, it's a very, very challenging kind of an exercise. Not only for D2C, by the way, and this is for your information, that most of the segments, whether you talk about the B2B, the B2C, and D2C, and any kind of segment, everybody is struggling with customer acquisition. What has happened in the last couple of years is, with the infusion of a lot of investor money coming into the startup ecosystem, the best way of acquiring customer has been through discounting, which is where you discount your heart out, get the customer to be with you for as long as possible. And I think as long as possible is the key word here.
Sure.
There is no way you can actually maybe, get the customer loyalty without doing that. So it is not only a problem with the D2C segment, all the other segments are basically suffering from it. As you grow your customer base, this becomes a natural extension of the offering that you are giving to your customers.
Okay, we've run completely out of time on today's masterclass. I want to thank each of you, Anurag, Adil, Madan. Thank you so much for taking the time to join us. All right, that's all we could manage to put into part 1 and part 2 of the Leaders of Tomorrow masterclass on revitalizing the Indian economy through digital lending. If you have any feedback for us, for those of you watching at home, our contact details are up on your screen. Do let us know your feedback, your questions, your suggestions. Thanks for watching. Have a good night. What's your advice for entrepreneurs when it comes to data protection of their financial data?
Consider an information security practice within your organization, because the threat is so dynamic, right? It changes every month, right? So you need an information security practice that's constantly training your team, that's constantly evaluating what the risk is there. That's level 2.
Hello, welcome to Leaders of Tomorrow, India's largest platform for entrepreneurs. No matter what questions you have related to any aspect of your business, we've got it covered here on the show. I'm Sunanda Jaiseelan. On our masterclasses, we give you the opportunity to connect live on a national platform with our experts on different aspects, anything and everything that matters to you. 3 experts joining us for just that, to break down what you should keep in mind. Let me dive right in and introduce our guests. Adil Shetty, Co-Chair, FICCI Fintech Committee, Co-Founder and CEO, BankBazaar.com. Anurag Jain, President, DLAI, Founder and Executive Director, Credex. Madan Padiki, Founder, CEO, OneBridge. Is India really in a position where we can go completely digital when we're talking fintech, when we're talking lending, when we're talking loans?
The model that will work in the rural is a phygital model where you need a physical presence and a digital process.
The RBI allowed what is digital KYC. We are seeing that 80% of people who are taking products want to do a video with us.
Where we're talking about reaching out to them digitally, maybe enable them to use digital mediums to make payments, their bills. Getting there would be far easier and faster as compared to when we talk about maybe the financial inclusion bit.
Briefly also want to bring the point of data protection and data privacy up at this point. Open to all 3 of you. Adil, to you first, perhaps. We were talking about the working group that the RBI has set up earlier. One of the things that the RBI flagged off also is this entire concern around data protection, even as more and more people for the first time are coming onto digital platforms as far as financial transactions are concerned. Do you feel there's enough understanding? Do you feel industry is perhaps doing enough? What's your advice for entrepreneurs when it comes to data protection of their financial data?
So we're a 12-year-old company, but you can never say that the job is done, because the threat increases on a month-on-month basis and you need to stay ahead of it. So we see it as 3 levels, Sunanda. So level 1, right, is having the right certifications and the security standards in place. I mean PCI, DSS, I mean ISO 27001. So that starts with that. Second, right, consider an information security practice within your organization, because the threat is so dynamic, right? It changes every month, right? So you need an information security practice that's constantly training your team, that's constantly evaluating what the risk is there. That's level 2. And level 3, right? There are a number of third-party service providers and tools out there to manage information security. There's some good Indian companies also which look at vulnerability assessment, penetration testing. So I'd say entrepreneurs should look at it at all 3 layers and treat it as a constant work in progress.
Madan, the group that you speak with, I would assume, you have to do just so much more when it comes to hand-holding them about data privacy and data security and what they should be doing. 1 or 2 quick things that you could perhaps talk about?
Yeah, so it comes back to the whole awareness that we need to create there. And just to give you an example, it exists, but we need to figure out how to make it more deeper and viral. We made the mistake in the initial days when we were registering our customers on our platform to send a SMS to them and called it as an OTP so that our entrepreneur could validate the customer. More than 9 out of 10 people refused to share our own OTP with us, saying that we've been told not to share OTPs, which I thought was a great example that at least in their minds, the message was do not share OTPs was etched, right?
Yeah.
So I always wonder, how did that message reach them so well? And what do we need to do to demystify this whole data protection thing for them and communicate in a way that they understand what the challenges are? Of course, for them, the conversations I have with them is they say, you know what, as long as I get a loan at the rate I want, I don't care about my data. Seems to be one comment that we keep hearing, saying that, I'm struggling to make both ends meet, just get me the money and I don't care. But I'm sure that will change over a period of time as some of the issues starts emerging out there as well. And I'm always stupefied at the amount of scams that they've been, subjected to, of insurance, of credit, of easy loans, of buy now, pay later, whatever, right? So I think there's a lot of education we need to do, as you said, zooming out, not just from a financial inclusion, but from a financial planning as well. I always think that, listen, maybe the wealth management service that we think for the ultra rich are far more required for the ultra poor because there are lesser resources to go about. So you need to create a robust mechanism out there as well.
So when we hear digital lending, we feel it's cheaper and faster to apply and to get those loans. However, in reality, that's not the case. What can be done? And the second question around the similar area, is digital lending more expensive than physical lending? Open to all 3 of you.
Let me take that first. So see, it doesn't matter whether you're borrowing offline or digitally. I think you need to be aware of what is on offer for you. And the interesting thing, right, is that every single person will potentially get a different offer from different banks, right? The same two individuals talking to one lender might get different rates because their credit scores are different. SBI, for example, just launched a product saying that if your credit score is over 800, you can get your home loan as low as 6.7%. But if your credit score is lower than 700, your rate automatically goes to 6.9. So I think there is a need for consumers to take control of their finances and to basically compare the market and be aware of what's out there. Now, I want to say, right, that you might get a cheaper offer offline, but in most cases, right, I find that digital offers tend to be very competitive for 2 reasons. So one is it's a transparent media. So it's out there, you can see it, it's very clear. If you want to take it, you take it, otherwise you don't. So I find that lenders make good offers when they make it digitally because it's so transparent. And also digital operations cost because of video KYC, not having to send someone to your house to collect your bank statements, to collect your pay slip tends to be lower. So yes, I find often that the digital loan is cheaper. But that being said, right, every lender has a different rate. You might get rate A from lender A, but a completely different rate from lender B. So you need to do your research and you need to compare what's out there.
The biggest hack, and which might sound counterintuitive because we are in a digital credit kind of environment. No, for especially the MSMEs and the smaller businesses, I think the best way to get the best offer in the market is to shop around, talk to people, look at what are the online options, what are the offline options available. Go online, check out what is the best offer you're getting there, check offline, say, ask for it, shop around it, and try and guess the best offer that is available. Outside that, I think there is a need for the MSMEs or the smaller businesses also to be a bit disciplined as far as their paperwork is concerned. So that is one reason, and I think the credit history part of it emanates from there. If you have your paperwork in place, if you have your credit history in place, I think you anyways will be able to shop around for a low offer as compared to the others in the market. So there is some bit of it that needs to be done at your end as well, because a lot of lenders cite these reasons to charge you higher. Maybe it is in terms of your statutory compliances or any other kind of paperwork. But if you are prim and proper and maybe more disciplined around it, you might be able to negotiate a better offer.
Madan, I would presume this question is for you. He says there are many ideas that are not getting implemented due to non-availability of financial assistance easily from banks, particularly in rural areas.
Yeah.
In reality, obtaining of loans or credit facilities is not easy, especially for those who are not backed by good corpus finance, he says, which I would assume, he's talking about if you don't already have some sort of personal money or, friends and family who are investing, what do you do?
That's definitely a valid question, especially as you said in rural areas. See, what we've seen is that, agri and agri-based businesses, of course, the banking system has figured that out from a priority sector lending, and there's a process. It's not easy, but there's a process. It works. On the other hand, we've seen MFIs do wonders with the SHG and the livelihood loans. But if you are somewhere in between, I'm assuming that, if I want to do a startup in a tier 3 town, or I want to start a business, and I need to go access money without any collateral or without any credit history, it indeed is a huge area where I've met many entrepreneurs who say, listen, I need the 2 lakh, 3 lakhs. I'm unable to access it because, I don't have a home, I don't have a credit history, I'm a first-time entrepreneur. In fact, we are working with a few governments to kind of figure out how do we solve that as a structural thing. And to Anurag's point earlier on, what can the governments do to kind of create some kind of a safety nets for lenders in that, and help these entrepreneurs tide that first loan through, and then with their performance, you can get the other ones through. So there's no easy answer there as far as we've seen it happen.
I think for a first-time person, like Madan said, it's always tough, right? But you should consider a loan against property. Now, what a loan against property does, right, is gives the lender comfort that there is a security backing this business loan. So they're like, okay, I don't understand your business and I don't understand exactly how it will work, but I'm open and more flexible with a loan against property. So that, I think, is one option. Now, the nice thing now is rates are the lowest they've been in 15 years. So loan against property, right, is quite fundable. So I've seen large banks out there doing loan against property at 8%, 8.5%, 9%. So that's an option he should look at if he has a property in his family.
Gentlemen, I have to take a quick break. On that note, we're back in just a moment after this commercial break. Do stay tuned. Welcome back with us here on Leaders of Tomorrow Masterclass. Tonight, we're talking about digital lending and re-energizing the Indian economy. I am curious about, whether this panel would want to discuss the different types of digital lending. I mean, things like peer-to-peer lending, etc., becoming more and more popular. Is that something that you want to perhaps discuss for the benefit of today's audience about what you see sustaining opportunities, challenges, any of these things?
I think there are a lot of business models which have emerged in the last couple of years, and while we can talk about what are the interesting insights into each of these models, I mean, it's very difficult to predict whether each of these models will see the light of the day, or maybe
Sure.
they'll be able to disrupt the industry and all. So some of them, as you rightly talked about, I mean, one of them has been the peer-to-peer lending space, where we have an individual lending to another individual, on the other side of the internet. I mean, so you don't see the other individual, you basically get to know some bits of information from the peer-to-peer lender, and who's telling you that this is the person who's wanting credit, and you're the person who's basically having some surplus, and you can probably lend it to that particular person on the other side. The other business models that you've seen in the market has been ranging, I mean, from being a fintech NBFC to aggregators to maybe marketplaces where you have both the supply and the demand coming in on both the sides, and you do not have one single borrower or one single lender who is doing everything. So you have a basket of lenders and a basket of borrowers, on either side of the marketplace, and they are basically creating, that environment or the ecosystem and doing the matchmaking, at the ground level.
Sure.
If I can come in there, Sunanda, I think, at Bank Bazaar, talking to all the banks and NBFCs, I think one clear trend I see is in partnership. I think there's a clear understanding in this market, right, that one entity can't do everything, right? So one entity can't build all access to all consumers. One entity can't take off building the entire balance sheet. One entity can't build all products. I think there's a deep respect in banks and in fintechs that the future is going to be about partnerships. So I think each type of entity brings its core strength. And on the fintech side, it is technology, it is access to millions and millions of new customers. It's this new way of working, this new DNA. And with the banks, it's managing balance sheet, treasury risk. I see partnership as a clear trend going forward.
Okay, there's a follow-on question from Subodh Padnis. He's saying, how is fintech changing the landscape for SME lending and borrowing in the country? Open to all three of you.
I think maybe I can take up that question, because we're being closer to the SMEs and small businesses. If you look at, let's say, half a decade back, starting 2014 and 15 cohort of companies that have come in, you see a lot of these companies focusing on the SME lending side. And what is interesting with some of these companies has been that they've picked up their sweet spots. So while some of them started with funding the sellers on the e-commerce platform, which basically meant that they had more information than what was available for a normal MSME that they were underwriting in an open market. So the idea was to basically take advantage of that extra data that is available for the sellers on an e-commerce market platform, and be able to make have some certainty in terms of the credit exposure that you are taking on them. Today, look at the 65 million MSMEs which are today available, and if you swim across the sea of MSMEs, it is very difficult and very expensive to be able to onboard some of these MSMEs with the right kind of data. What they've done is they've chosen these platforms or maybe aggregators where they're able to get some extra bit of information around the sales or maybe around their business, so that they're able to take the credit underwriting decision easily.
So let's take closing comments, and I do want for the three of you to be able to talk to our viewers about how perhaps the digital lending scenario has changed in 2021. We are talking the backdrop of the pandemic and the forced, if I can call it that, acceleration of digitization across all platforms, including digital lending, of course. What should they be aware of for 2021 for someone perhaps looking at getting a loan, for someone looking at raising funds, for someone looking at the insurance space, anything in the fintech space, anything around lending and borrowing? What should they be aware of? Let me come to you first, Madan.
Sure, Sunanda. From a rural perspective, I put it as three things. One, I think with all reports talking about a revival in the rural economy leading the growth for the country, I think we'll see a lot more focus by a variety of players, including I'm saying the consumer durables, the FMCG companies, and therefore the banks and digital lenders to focus on rural, which means we should hopefully see a lot more customized products for rural coming into play rather than trickle-down versions from the urban to the rural side. Two, I think fortune favors the prepared. So if you are a borrower in a tier 3, tier 4 town, start preparing and start planning for what your future is likely to be, and start putting all those documentations and start building a proper credit history in place. And third, keep exploring variety of digital models. Just because you have a distrust of the digital doesn't mean that you don't embrace it. I think, of course, digital is the future. So try out a few things, maybe try it out with somebody that you trust locally, try out a digital model, but slowly start moving towards that because that will probably give you better rates, faster turnarounds, etc., right? So that would be my 3-point summary.
Okay, Adil?
The big change is, if you look at both the lenders and the consumers, what happened amidst COVID is that in every lender, the first thing they want to talk about when they plan for the next year is they want to talk about what are we going to do digital. What product are we going to offer? How are we going to make it better? How are we going to make it faster? And I'm talking about from the biggest bank, right, to every single NBFC out there and every fintech out there. Everyone's talking about how to make it faster, how to make it more secure, and how to make it scalable. We also know that this is top of mind for the regulator. Now, from the consumer side, right, I think there's a clear understanding that, hey, in the middle of COVID, I don't want to meet someone 3 times, hand over so many documents, go to a bank branch. If there's a way for me to do this conveniently, right? And it's not that I can't do a KYC, but I want to do it digitally. It's not that I don't want to give my PAN, but I want to give it digitally. So from the consumer side, right, given a choice, I see a vast majority of people wanting to do this in a safe and secure digital manner. So what I think is going to happen is we're going to see a disproportionate growth in people consuming products digitally. And the channel is going to grow, albeit from a smaller base, but is going to grow very, very quickly to become the normal way that people transact on financial products. The normal way is going to be on their phone.
Okay, with that, let me come to you, Anurag, and really give you the chance to have the last word. What do you think is going to be the biggest change in 2021 for an entrepreneur, and how really is lending perhaps going to change? What would you want to tell us?
I think this is the best time for entrepreneurs, as far as the liquidity conditions in the market is concerned. If I talk from a small business perspective, while the demand was at its all-time low, the supply was zero during the lockdown. But what we have seen is a resurgence in the last couple of months where we are seeing the liquidity being pumped into the market like to the maximum level. And demand is taking its own sweet time to sort of come back. So what the eventual result of this disconnect that is there in the market is that we have a lot of liquidity available at cheaper rates in the market. So if you are an entrepreneur who's already doing a business, so this is the right time to fill your coffers, be a well capitalized business, take on maybe some of it at a cheaper cost and maybe try and use it rationally. If you are wanting to start, again, it is the right time to do that because a lot of investors, a lot of companies, a lot of VCs and PE firms have been sitting on the fence because of the pandemic, and they are looking for the right ideas to pump in their money. So either ways, I think this is a very, very opportune time for the entrepreneurs to maybe take their business to the next level.
Okay, we've run completely out of time on today's masterclass. I want to thank each of you, Anurag, Adil, Madan. Thank you so much for taking the time to join us here on the Leaders of Tomorrow masterclass. All right, that's all we could manage to put into part 1 and part 2 of the Leaders of Tomorrow masterclass on revitalizing the Indian economy through digital lending. If you have any feedback for us, for those of you watching at home, our contact details are up on your screen. Do let us know your feedback, your questions, your suggestions. Thanks for watching. Have a good night.